Alison Baker manages the UK oil and gas sector team for PwC, the accountancy and professional services firm. Hello, Alison.
Good morning.
Thank you for joining us today. Now, the big theme this year, I suppose, is the ongoing fall in oil prices. There's a lot of uncertainty and risk when looking at the future. Now, are companies really focusing on the years ahead, or are they concentrating on the here and now?
I think it's been mixed response. I think we've seen many adopt what I would describe as the traditional knee-jerk reaction of cutting, deferring capex, cutting heads, and then hoping that the price will rebound quickly. There are others that have identified that this is probably structurally slightly different. It's supply-led rather than demand, and therefore there needs to be a slightly longer-term and more sustainable response in terms of how they do reduce costs, but with a view that this may be lower for longer, but that they want to then come out the other side fitter and stronger for the world beyond $50 oil price.
And is your view that we are in for a lower for longer price scenario when it comes to oil prices?
Yeah, I mean, I think certainly our view is this isn't going to rebound quickly, but it's not lower forever, if I take the words from one of my panellists this morning. It's a question of when will it come back, when will the supply and demand equilibrium come back to play, but also what will happen in relation to things like Paris and the climate change agenda, and how might that impact on the longer term investment strategies for these businesses.
Okay, so tell us a bit more about the approach companies should be adopting. Which areas do oil firms really need to concentrate on? The key challenges besides cheap oil, what are they right now?
I think what I would say is almost going back to, and we heard it from the strategy panel this morning, what can we be essentially best in the world? Where are our real capabilities, and how do we build our strategy around those capabilities? And that might be about where you play in relation to, are we deep water experts? Are we in gas? Are we in late life assets? And I think fundamentally, as global businesses, these organisations are making decisions about how they deploy their capital and actually being coherent in relation to what they can be the best in the world at, and being consistent in applying their capital in that area will mean they'll maximise value, and that's got to be a good thing for shareholders.
So reducing costs, obviously very important. What about reducing debt? I mean, interest rates are likely to increase quite soon in the US and then the UK, so what should they do?
Well, one of the things we issued a piece of research about 2 months ago around lower for longer scenario, and one of the things that surprised me was that in taking broadly the top 60 E&P companies, they'd issued 150 billion of new debt in the 12 months since July last year, and some of that was about making use of the opportunity of low interest rates, but some of it was also about continuing to provide facility and liquidity to their balance sheets to continue on what are very huge capital intensive projects where the train has already left the state. They need to continue to invest in those projects. You can't stop them once they're sanctioned and off and running. So that's really surprised me. So the level of debt in the system has gone up. So yes, as interest rates come back, we might see some potential for a bit of tension in the system. And indeed, certainly at the lower end, you take US shale, where a lot of small independent operators, highly leveraged, we might see some more financial shocks in that part of the industry.
Now, Alison, we have discussed the impact of this low oil price environment for companies. What about the impact on governments?
For oil-producing nations, it's massive. You take Nigeria, Angola as two examples. Their budget deficits have been dramatically impacted by the lower fiscal take arising from oil tax receipts. And that's only going to be exacerbated as we stay in a lower for longer scenario. So they're looking at different ways that they can increase or certainly deal with budget deficits. And that's making some of these countries more unattractive when I come back to global investment strategies. But fundamentally, others are taking the opportunity of lower oil prices to deal with, for example, subsidies. So India and Indonesia would be two prime examples where there were subsidies on oil prices that have now been eliminated. So that for me is just two examples, but I think government will, particularly post-Paris, will have a huge role to play in the transition of energy businesses into the future.
It sounds like now is a critical time for the market, isn't it?
I think, and certainly if you take the UK, we're at an inflection point. I think we've heard this morning some positive news from some of the operators around how they see the opportunity in the North Sea. Others very clear about their divestment strategy. So I think as we sit here today, certainly in the next 5 years, I see quite a lot of activity, quite a lot of volatility, but those that address strategy, address the cost base, and actually think about what the longer term investments should be that play to their strengths, they will come out fitter, leaner and stronger in the future.
Yeah, I was going to ask you about that. It's all about becoming more efficient, I suppose, for companies and placing themselves in the best position possible to tap into a potential rebound in oil prices in the longer term.
Absolutely, and I think there's a sort of a catharsis that's come with this price correction, which is driving a greater level of technology, innovation, undoubtedly an improvement in the level of collaboration and venturing, joint venturing across the industry. And I hope that is enhanced and certainly sustained once the oil price rebounds. What would be awful is if the price rebounds and people go back to behaving the way they were when it was $100 a barrel.
Alison, thank you very much.
Thank you.
Alison Baker, head of the UK Oil and Gas team at PwC.